Welcome, ladies and gentlemen. Today is the 28th of April 2021. It's 8:43 local time. I'm doing this video because the last one missed the sound. We have the Federal Reserve conference going on, and as expected, Euro-dollar is cleaning the house, now 1.2185. You can see here how it goes up against those shorties, taking out the stops. Medium-term stops, short-term stops, long-term stops above the highs. And as you know, once the stops are touched, they change color to yellow and then they disappear. So I'm just trying to capture a bit of this price action here. So we have unchanged rates as expected. Powell is talking about the impact of COVID, etc. So far, nothing special in his statements.
Very likely, it seems to me, that for us to achieve the economic outcomes, we would need to taper or to raise interest rates. We would also have to have made very substantial progress in getting the virus under control. Not necessarily fully under control. There is a possibility, of course, that we will have ongoing outbreaks over the summer, various regional outbreaks, and potentially next winter as well. But we'll be looking for substantial progress toward our goals, substantial further progress toward our goals as we think about tapering asset purchases.
Thank you. Victoria.
Usual thing is going on, we know that.
Hi, Chair Powell. I wanted to ask, you've talked a lot during this crisis about the need to have a lot of help from fiscal policy and monetary policy to make sure that there's not long-term scarring in the economy. And I was just wondering, given all the policies that have been put in place, do you expect there to still be some long-term scarring? And if so, what are you most worried about? Where are you most worried about that showing up?
So I would say that we were very worried about scarring, both in the labor market, from people being out of the labor market for an extended period of time. The evidence is clear that it becomes much more difficult if you're out for a long time to get back in and get back to the life that you had. Same thing with these small businesses.
It's a lot of noise, It's always the same with those conferences.
We're going to wipe out many of
if you follow my channel, you know what I think about those.
I would say that so far, here we are in late April 2021, we haven't experienced that level of scarring either in the labor market or among smaller businesses. So we're not living that downside case that we're very concerned about a year ago. Notwithstanding that, we're a long way from full employment. Payroll jobs are 8.4 million below where they were in February of 2020. We've got a long ways to go, and also, it's going to be a different economy. So we've been hearing a lot from companies that they've been looking at deploying better technology and perhaps fewer people. Some of the service industries that have been employing a lot of people. It may well be. It seems quite likely that a number of the people who had those service sector jobs will struggle to find the same job and may need time to find work and get back to the working life they had. These were people who were working in February of 2020. They clearly want to work. So those people are going to need help. And so while I would say we haven't seen really highly elevated levels of unemployment for, up in the teens that we thought we might have for an extended period of time, we've still got a lot of people who are out of work. We want to get them back to work as quickly as possible, and that's really one of the things we're trying to achieve with our policy.
Thank you. Rachel Siegel.
Thank you, Michelle, and thank you, Chair Powell, for taking our questions. The housing market in many American cities is seeing booming prices, bidding wars, and all cash offers well above asking price. And this is happening at the same time that housing is becoming much more expensive for lower income Americans and people who are still struggling from the pandemic. Do you have concerns that there are localized housing bubbles or that there's the potential for that? And what is the Fed doing to monitor or address this? Thank you.
So we do monitor the housing market.
Okay, so this conference is going on. So yeah, so the typical case of house cleaning. So first down move, then up move. You see we have those medium-term stops just above the price, up to 1.2165 or something like that. But you know, tradability is low in those cases, as we know. So you know, the price can do jumps based on comments. We don't like to place trades or to gamble. We wait until those kind of events passed, and we can reassess the market.
Low doc, no doc lending practices.
I'm just trying to capture a little bit of this market structure here while he talks.
People are over-levered and owning a lot of houses. There's no question, though, that housing prices are going up, and so we're watching that carefully. It's partly because there's clearly strong demand, and there's just not a lot of supply right now. So builders are struggling to keep up with the demand. Clearly, inventories are tremendously low. We're all hearing those stories.
So price can take those short-term stops or the upper stops. You know,
this is a problem.
there's the freedom to take either of these.
It's going to be that much harder for people to get that first house, and that's a problem. I mean, it's part of a strong economy with people having money to spend and wanting to invest in housing. So in that sense, it's good. It's clearly the strongest housing market that we've seen since the global financial crisis. And my hope would be that over time, housing builders can react to this demand and come up with more supply, and workers will come back to work in that industry. So, it's not an unalloyed good to have prices going up this much, and we're watching it very carefully. I don't see the kind of financial stability concerns, though, that really do reside around the housing sector. So many of the financial crack-ups in all countries, all Western countries that have happened in the last 30 years have been around housing. We really don't see that here. We don't see bad loans and unsustainable prices and that kind of thing.
Thank you. Chris Rugaber, Associated Press.
Hi, thank you for my question. I wanted to ask about the labor market. You see things such as in the Beige Book, you saw in the Beige Book anecdotes about businesses not able to find workers. Back to the labor market for fear of getting sick, child care concerns, and so forth. Do you see these as also just sort of temporary bottlenecks that won't have much effect on the long-term health of the labor market? How are you thinking about these kinds of issues?
Chris, you were breaking up a little there, but I think I did get your question. So, I think there are a number of things going on there. The tension between a high level of unemployment and yet many companies saying they can't find, an elevated number of companies saying that they can't find workers. So what's really going on there? It may also be that, for example, one big factor